There's only two guarantees in life, they say, death and taxes. Well, I can't eliminate death, but I can eliminate the taxes. So specifically today, we're going to talk about eliminating taxes on your personal residence, which can be really tricky. But there is a way in 2025 and beyond. It's time to get smart with your money and figure out how you can do that. So let's take a look on the screen and let me show you exactly how we're going to make this happen for you. So let's say we've got this house, right? And we bought it long ago for $500,000. Now it is worth $2.5 million. After our basis of $500,000, right? We got $2 million, right? And now after that, the first $500,000 is tax-free. Thank you, IRS, for that one. Now that's if you are married. It's $250,000 if you are single. Sorry, single guys and gals. But that means we're looking at over here a $1.5 million gain. Now, long-term capital tax, 20%. That means that this is going to cost you $300,000 in taxes. Now, I don't know about you, but there's plenty of people who will not be very happy about the idea of having to spend $300,000 in taxes. In fact, they'll try to avoid selling the house entirely just so they don't have to pay the tax. Let's look at a different way of dealing with that $1.5 million gain. What we can do at KHA Group is set up something for you called a TAC. Now, I don't want to get too deep into the weeds here, but the C over there in TAC stands for corporation. And if you know anything about tax deferral strategies or different strategies for avoiding paying taxes legally, it comes down to this. You don't want to own, you want to manage. You want to be the manager. And with this TAC, that's exactly what you are. You're the manager of this corporation. So what happens is before the sale, this 1.5 million, the title of this property, which is eventually going to lead to a $1.5 million taxable gain, is going to go into the TAC. Okay, so now the title is being held by the TAC, and then you go sell the house regularly like you would. Now, that $1.5 million, instead of you paying 20% tax on that, instead, you're only going to pay 40 basis points on that. So in dollars and cents, that means instead of spending $300,000 in taxes, you're only going to spend $6,000 in taxes. Obviously, way better. Okay. And this is again because you are the manager. Now, I'm not going to get into in this video of, well, wait a minute, what about the corporation? Doesn't it have to pay taxes on the sale? You want to know how that works? Call me, become a client. Let's do this for you. And then I'll explain to you how that will work. But for the purposes of this video, I just want to talk about another issue that people often ask about. They'll say, great, but what's the catch? Like, can I not use the money that's now in this tax, in the TAC bank account? Can I not use that for a long period of time? Is this tied up for some long period of years? Or are there some limits on how I can use the money? And I'm happy to answer you that the answer to that is no. It's your money. Well, I should say you're the manager of that money. And if you want to send that over here to, let's say, invest, right? You can certainly do that. If you want to buy crypto, if you want to buy real estate, if you want to buy stocks, bonds, whatever, no problem. Or let's just say, no, I want to go the other way. I want to get myself something nice. I'd like to purchase a boat. I'd like to purchase a yacht. I'd like to just buy myself a second home and use that money as the down payment or whatever. There's nothing wrong with that either. As the manager, it's just a little different in how you're going to prepare the paperwork. But ultimately, because you're the manager, you're going to be in charge of how that money gets distributed. And we're going to be with you, frankly, every year, year by year, making sure that you stay tax compliant with this and you don't get your hand caught in the IRS cookie jar. So that's the kind of thing we do here at the KHA Group. We help people get smarter about their money, right? Pay less in taxes, get smarter about their insurance and not waste so much money on insurance, get smarter about their mortgages and owning their homes and taking 30-year mortgages and turning them into maybe 5 years until you have your house paid off, and keeping people out of costly and big investment mistakes. That's the kind of thing we do here. If you'd like to do the TAC for yourself and not pay capital gains tax or next to nearly eliminate it, you can reach out to us. And besides for that, we've got another great strategy coming your way in case you've already sold your home and you have a big capital gain looming your way. There's another strategy. We're going to talk about another video of how you don't have to pay taxes, even if you've already received the money in your bank account. And that's what we can help you with. Give us a call. And until then, see you next time.